Hello everyone, hope you all are doing well. Welcome to Diplomat's Desk. I am your host Meet Shah. Today we explore a critical but often undercovered thread that links four of the global heavyweight nations: the United States, China, Russia, and India. On paper, they may seem locked in rivalry, but in reality, they are all playing the same high stakes game, the game of advanced chips, critical minerals, and energy leverage. Let's dig into how this plays out, why each makes the decisions they do, and what hidden agendas are at work. First, chips. The US is still restricting China's access to advanced semiconductor manufacturing tools and AI processing components. And Washington officials recently told Congress they expect Huawei's 2025 AI chip output to cap out around 2 lakh units, far short of domestic demand. That keeps pressure on China's compute capacity even as it sprints to close the gap. India, meanwhile, isn't waiting on the sidelines. In May 2025, the cabinet approved the HCL Foxconn semiconductor unit near Jewar Airport, India's sixth plant under the semiconductor mission, targeting 20,000 wafers per month and 36 million display driver chips annually by 2027. And just last week, India locked in 113 GE F404 engines for the Tejas Mk-1A fighter fleet, a major US India defense industrial step that tightens aerospace ties and accelerates IAF modernizations. India says we will participate and scale. Russia says we will survive and pivot. China says we'll build around it, and US says we'll slow your frontier compute. The real risk isn't one round of sanctions or one export control. The risk is substitution and fragmentation. Once the alternative ecosystem matures, the old controls weakens dramatically. Having set the compute landscape, let's move beneath the surface to what powers the chips themselves. There's another layer beneath the chip war: the critical minerals that power chips, EVs, batteries, clean tech, and strategic hardware. Think rare earth, gallium, graphite, cobalt, nickel. China has tightened quotas and reduced transparency around its rare earth exports, signaling leverage over a sector that feeds everything from EVs and missiles to AI servers. Analysts note that even if Beijing eases some export rules, licensing will still get flows. The bottom line: price setting power remains a strategic tool. The hidden agenda is everyone talks about resilience, but the real game is price setting power. If you control the upstream and the refining, you tax the rest of the world's growth. For the US, the play is reshoring mining and processing and aligning allies to the reduced dependence. For China, it's upstream dominance plus moving downstream into chips and finished goods. For India, it's courting supply chain roles and positioning as a trusted node. For Russia, it's monetizing resources and finding creative workarounds to sanctions. This isn't just about materials, it's about control of future value chains. Now let's shift from the raw materials to the fuel that keeps all global industry and geopolitics running. Energy is the quiet but potent equalizer in this game. Advanced manufactured data centers and defense all consume energies. Oil and gas flows shape diplomatic leeway, economic strength, and growth momentum. India has been pragmatic. It has increased purchases of discounted Russian crude even amid sanction risks. Because growth and inflation management trump posturing for a while, India's share of OPEC imports hit record lows as Russia filled the gap. China remains the world's top crude importer and leverages that position to negotiate margins and import deals. Russia's strategy is fairly straightforward: export crude, fund the state and war economy, bypass or blunt sanction wherever possible. The US uses tariffs, secondary sanctions, LNG diplomacy, and strategic supply deals to shape what others can do in the energy space. Again, the public narrative is about values or principles. The hidden story is cheap energy buys time, stable imports by growth, and control of flows by influence. With major economics and resources covered, let's look up at the hard security dimensions: military drills, diplomacy, and defense moves. Let's zoom into the hard security. China and Russia held joint naval drills, Maritime Interaction 2025, with anti submarine and air defense training in the Sea of Japan this August underscoring operational coordination at sea. US-China military hotlines. In early November 2025, US Defense Secretary Pete Hegseth and China's Admiral Dong Jun said they'll establish direct military-to-military channels to deconflict incidents, important given recent close calls in the region. The Quad diplomacy front on July 1st, 2025, the Quad foreign ministers US, India, Japan, Australia met in Washington DC and rolled out initiatives on maritime security, critical tech, and HADR, a subtle but steady signal to Beijing. On another front, India and China resumed high-level corps commander talks on October 2025 at Chuzul, Moldo, which was round 23, to address remaining LAC friction points. A reminder that de-risking on land is still unfinished. And on India-Australia Defence Cooperation in October 2025, the two agreed a submarine rescue pact and a deeper defence industrial cooperation, knitting Quad militaries a bit tighter in the Indian Ocean. Those are the moves. Now we step back and ask, why are they doing this? What's the strategy behind these strategies? Here's the why. The US wants to protect the AI military edge by managing China's access to frontier compute and by networking allies. China aims to erase vulnerability by scaling domestic chips and pricing power in minerals plus maintaining mill-to-mill deterrence with Russia. India is pragmatic. Lock oil at workable prices, build chips capacity, and co-develop defense with partners like the US while managing the border with China. Russia seeks revenue and resilience, energy exports to Asia, naval drills with China, and continued armed industrial output under sanctions. So, all of them speak of sovereignty, growth, influence, but behind the lines, you will see one consistent agenda: control of the future economy. So, there are two big risks: the substitution trap. Every clamp on tech pushes China to build alternatives. If those matures, we end up with two tech ecosystems and increased cost and fragmentation for the global firm. The material squeeze, if quotas tighten and build out accelerates cost pressure, builds mineral bottlenecks are now structural, not cyclical. So, what to watch next? Does US China military channeling remain stable and prevent miscalculations? Do India's cheap projects and defense industrial deals hit their 2027 milestones? Do China's rare earth and critical minerals rules tighten or loosen? And what happens to prices and lead times? Do Russia China joint drills grow in scale and frequency? And does the Putin Modi summit in India lock in substantive energy and defense deliverables? The headline says rivals, supply chain says roommates. If you want tomorrow's geopolitics before it hits your feed, track the fabs, the mines, and the tankers. Thanks for watching. Like and subscribe for more sharp, fact, fast briefings.